Hello and welcome to yet another instalment of our Nucleus Wealth Insight series. Just a quick reminder that the following presentation is general information only and does not take into account your personal circumstances. Whilst Nucleus Wealth aims to present informing and sometimes entertaining content, please consult your investment professional, financial advisor, or better yet, speak to us before making any decisions based on any of the themes discussed in today's presentation. Hello and welcome to this week's instalment of Nucleus Investment Insights. We're in for a treat this week as we meet long-time friend of macro business and popular economist Dr. Cameron Murray, who we managed to catch on a rare trip down to Melbourne for a keynote address. Cameron has done some extensive work in helping to uncover the often opaque world of public and private relationships in his book The Game of Mates, and has recently released a report looking into affordable housing policies. In today's interview, we cover off on some of the key themes discussed by Cameron in his publications, and then look at some of the wider investment implications that we can then leverage in how we invest money every day at Nucleus Wealth. Join Nucleus Wealth's Head of Investments, Damien Klassen, our Chief Economist, Leith Van Onselen, and myself as we chat all things Game of Mates with Cameron Murray. I trust you enjoy. Here we have Dr. Cameron Murray. Cameron is an economist and consultant who specialises in property markets, environmental economics and corruption. He teaches at the University of Queensland, blogs at fresheconomicthinking.com and is co-author of last year's breakout book, The Game of Mates. We're here at the Brunswick Mess Hall and Cameron's the keynote speaker for Prosper Australia's 127th Henry George commemorative dinner. Welcome to Nucleus Investment Insights, Dr. Cameron Murray.
Thanks for having me.
So just a quick one, just to get us started. So we're here with Prosper, or you're here as a keynote speaker for Prosper. Would you like to just give us a little bit of background as to why you're here, why you're down in Melbourne and away from the sunny Brisbane climate?
Well, we're here tonight to talk about housing, and the main thing I want to tell people today is we've got housing wrong. We've been trying to think about improving housing affordability by making little tweaks to the market price and saying, well, everyone has to pay the market price. But in other parts of the economy, we don't do that. If we want cheap healthcare, we don't tell people, oh, we've got to tweak the market price, open up supply. What we do is say, hey, we're going to just create a massive public system and anyone who needs it can show up and get free healthcare. That's how we make healthcare cheap. But in housing, we just won't take that extra step and say, what kind of system can we create at a sort of social level that makes housing cheap? We're sort of tied to this market price, and it's not going to get us anywhere. At best, some of the people who talk about, loosening supply, they're talking about building 50,000 extra houses per year for 10 years. So that's going to take, 2% of the workforce away from what they're doing to building extra houses, which is about the workforce of Canberra every single year for 10 years. And we're going to maybe get 10% lower prices.
Wow. Yep.
That's sort of the best we're aiming for. Now, I think we can do a fair bit better. And tonight I'm going to be talking about how we can tomorrow reduce the cost of housing by 40 to 50%. In one go. Now, and I need to be clear here, it's not about reducing the market price of housing by 40%. I'm talking about creating an alternative system like the public health system where we allow access to people for a cheap price. And I think that's where we need to start thinking, and no one's talking about that except, surprisingly, the guys at Prosper and now me.
Okay, yeah, sure thing. And so I take it this is the basis or the contents of your new report that you've got out called The Unspoken Alternatives for Expensive Housing. Is that right?
Yeah,
yep.
That's right. I mean, that's the whole point of the report is we don't talk about this stuff. We talk about the ineffective things, and the report goes into a lot of detail about these types of systems that exist. For example, in the ACT, they sold nearly 80% of the new dwellings in 1 year to people in an alternative land rent scheme where they saved around 37% compared to renting on their housing costs.
Wow.
And not only that, they had the security of tenure for life. So you couldn't kick them out and put the rent up next year. So that's a massive improvement. That's almost 4 times better than this 10-year ambitious scheme of devoting the entire workforce of Canberra to building extra housing.
But which vested interest? I guess there's not a vested interest that's profiting from that, is there? Is
Yeah.
that the main problem?
Yeah, you're right. No, vested interests are the problem. And I think, to be honest, the way we talk about housing affordability has been dominated by vested interests. And I think this, by sort of letting the market go as it is and creating a parallel alternative way to access housing, sort of gives people that freedom to go, oh, this is not going to affect me. You know, my investment's safe, my house is safe. That's just some alternative thing.
Yep.
You know, private health insurers still make a lot of money, even though we have a public system. So the whole idea is to just give that new alternative and to sort of sidestep that criticism or that political logjam of, geez, if we decrease housing prices by 10%, that's $700 billion of wealth we're just going to wipe off the 7.5 million highly influential voting homeowner households.
Yeah.
What if we sidestep that?
More affordable houses. Nobody wants lower house prices. Yeah.
Exactly. And so I really think it's important to think about how to sidestep that and say, hey, we don't want to affect your investment in your house. We're just going to start another thing over here on the side. Your investment is safe. You get 7 million happy people, I think, trying to sell that as a way to get cheaper housing. Then I'm going to, essentially reduce your assets by 10, 20%. That's hundreds of thousands of dollars out of your pocket.
Yep.
And that's a politically terrible move.
Just while we're on the topic of the property, I was just referring back to your last year's book, The Game of Mates, and the discussion between James, who is the entity in charge, or the mate in charge
He's
of the
the
mates.
connected insider,
that's
yes.
right. And then versus, of course, Bruce, which is what appears to be everybody else.
Bruce is the everyman, actually named after my uncle, who's one of the most Aussie people I know.
Oh, really? Yeah, no, that's fascinating. There you go. There's a bit of insight. I guess the point I was trying to get to was the existence of these grey gifts that are inside of particularly property zoning and the way that influences areas that are obviously looked at for investment, and then they get rezoned. Whoever owns the land gets the bulk of the uplift, and it's not shared through. And you've just to use as an example, you've used the Australian Capital Territory as potentially an area where they may have solved that. Was that right? Have I got that right?
Yeah, that's right. So the property market is all about getting political decisions in your favour and then banking the capital gains that come from that. So rezoning, if your plot of land is allowed to be used for a single dwelling, a house, and then some bureaucrat or politician draws a line on a map and says you can build a 20-storey apartment building, immediately you get that additional right for free. You don't have to pay for it. Now, we know it's a grey gift, it's a political giveaway, because, for example, in Sao Paulo in Brazil, you have to go to the government and buy at an auction what are called certificates of additional development potential.
Okay.
So if you have the right to build a single unit dwelling, you have to pay for every additional square metre of apartments you want to build on that house, and you go and you bid at an auction. So we know it's something we could sell. The ACT avoids it because they charge essentially a tax as 75% of the market value of the gain. So if your property goes from being worth 1 million to 5 million, because you've got this big plot of land that you've got your small house on, and now you can subdivide or put 2 apartment towers on, you've got to pay $3 million to the government if you want to get the approval to do that. Because that's, you could get that right and turn around and sell it and just bank the $4 million in your pocket. Now, we as a community should be getting that instead of giving it away. The big selling point is that once you take that giveaway out of the hands of those planners and those political decision makers, then you might get planning based on principles of housing, transport, town planning, livability, because it's not about who gets millions here, who gets millions there. It's about who gets a few 100,000. It's a smaller political game.
Yep. No, that makes sense. And I guess just finally, though, obviously that makes sense. It makes really good sense, I guess, economically and on paper and for the greater good. However, what do you see as the biggest obstacle in trying to convert, say, the New South Wales government and the Victorian government to a system like the ACT, where it appears to be working reasonably well?
The property industry.
Okay.
The land development industry. I'll give you an example in Queensland. Queensland was worried about affordable housing, so they said, we're going to create a statutory body that's going to take control of planning from the councils in certain key areas. We're going to fast track approvals. We're going to increase density. The guy they hired as the CEO of that statutory body was a former development manager for Lend-Lease who'd been lobbying to get his company's land rezoned, this agricultural land, to rezone so he can build 60,000 houses on it. He becomes the CEO of a statutory body, turns around, rezones Lend-Lease's land,
Surprise.
gifts them millions of dollars. Okay, he spends 10 years in this body, and then when he leaves, he now works for Stockland, another developer that he rezoned, or his group, the statutory body rezoned and handed $1 million of windfall gains. Now, these people, that's just one example. There's a whole network of people who are politically connected, who run on trading these favours and taking turns in having that power to make millionaires out of their mates. So unless the rest of the community can get organised enough and leverage, key elections, take hold of that media debate and say, hey, this is a giveaway, it's worth $11 billion a year, which is what I calculate, wedge the politicians in the corner and try and get that leverage. That's what we need to do.
And so when you say wedge the politicians, a platform for someone to be elected would be, putting some legislation in place that stops this sort of ability to bounce in and out of the private and public arena? Or
Well, yeah, both.
Yep.
Firstly, having to charge the value of the gains from zoning, and secondly, better cooling off periods and
lockouts.
Yeah, essentially lockouts. I mean, in
Yeah.
Queensland, we have the bizarre situation. We have, I think, a 3-year cooling off period for politicians to become professional lobbyists. But a professional lobbyist is a very particular independent consultant lobbyist. You can be an in-house lobbyist for a large company the day after you quit politics.
Yeah.
And most of the planning ministers in Australia, we've seen Anna Bligh jump over to the Bankers Association, which is actually an industry group and not a lobby group. So there's no problems there. So yeah, there's a lot to do. Now, thankfully, the Victorian Greens are now looking into this tax on the value. The Queensland Greens have adopted it. Sustainable Australia, the national political party, they've adopted that. So it's resonating. But I feel like the major parties are going to be a tough,
The weight
tough
of money
sell.
is against you.
Yeah, that's right. But I'd like to think that talking about the dollar value of giveaway is really good leverage for taking charge of the public debate on this. They can talk about, we need housing supply or whatever. You go, fine, rezone as much as you want, just charge for it. I don't care.
Yep.
Yeah.
Yep. Yeah, fantastic. Okay, very good. Anything from an investment standpoint, Damien?
Yeah, so
on
that's
property?
where I wanted to lead. This was, I've got actually a bunch of ones. So Game of Mates, and that's what part of doing this. Game of Mates, you went into a few industries, and the ones I picked on in particular are property developers, infrastructure, banks, mining, energy, and super. And I've got telco, which you didn't really talk about, but I've got that as one in the background. And so, because where I wanted to approach this from is, I've got a similar view about what makes an Australian company successful. Is that if you want to be a successful Australian company, you want to have your mates, and you want to have a nice cozy oligopoly or a nice cozy duopoly, and you get to make, out come the rewards. And so what you want to find, what we're always looking for is which are the sectors where they are starting to go through the transition, and which are the ones where they're not. So which are the ones where you're starting to open up the competition. And a good example recently was, over the last few years, we've seen in the telco space, we had a relatively cozy sort of oligopoly of Vodafone, Telstra, and Optus, and crashed. We had an outsider crash the party in TPG. Prices came flying down. Down went all the prices. Now we're looking at a merger, and Telstra's up, I think 20% ish in that range over the last little while, because everyone's sort of like, phew, we're back to a nice oligopoly.
Yeah.
And so what I'm trying to look for is the sectors that are the other way around. And I thought I'll start first with maybe slightly different tack, but infrastructure is one that always catches my mind. In that, the textbook version of these guys is that you've got a steady, slow growing company. They've got regulated prices and all this type of stuff like that. So these are the ones where you should see sort of 5-10% growth out of these companies every year. Now, Sydney Airports is up 1,463% over the last 15 years in prices.
Wow.
APA is just under 1,000% over 15 years. Transurban's over 1,000%, but it took them 20 years to get there, so they're dragging the chain a bit on that. AGL's up 740%, Origin's up 800%, and Spark, well behind it at only 240% over 10 years. So, and these are all the steady price-regulated companies. Now, we have seen falling interest rates, so there's slightly, some of that price is because of that. But you don't make 1,000% returns unless you're capturing value that should be going to other people. And so I look at that sector and go, is there anything on the radar that looks like they're not going to keep getting the capture? And Transurban just announced recently another big deal to get another roadway in Sydney. WestConnex, yeah. So
in which sector will the music stop first?
First is what I'm saying, and I'm saying in the infrastructure sector, I can't see any signs of it stopping.
No, I can't either, to be honest. I guess my general view is this is going to get worse from a social perspective before it gets better.
Yeah.
These groups will become more entrenched and more captured, and it's going to take a fair bit of political fragmentation and agitation from the electorate before we see any serious change. So, look, I don't see anything on the radar in the near future. I mean, we have seen some slight changes in Queensland. Apparently, we're going to have a new government renewable energy supplier come in.
Yeah.
But that's pretty small beans in terms of what's going on elsewhere with the airports, the roads, Transurban. It's just so easy for them. So many politicians would have a nest egg totally exposed to these sectors, and not considering them personally, but their networks of friends and associates are heavily invested in these. So it's very hard to turn around and say, hey, you know what I think we need to do? We need to facilitate some new entrants in these markets. How can we do that?
Yep.
And then you've got to activate all these people whose own bank balance is on the line to do this. I think you've got 10 happy years until we have some real political change.
Yep.
And I think it's a toss of the coin which one comes first. There'll be a straw that breaks the camel's back. There'll be some project that is just such an obvious gift. Some politicians will be like, no, that's a step too far. Some of those on the edge of the networks. So I'm sorry.
No, that's fine. No, look, I'm investing for this. This is where I think I'm completely with you on the philosophical side, but in the end, we're investing real money for people.
Yeah, I guess the question is how much of those gains have factored in the expectation that this game's going to continue in the near future.
Yeah.
That's the only thing you want to know. Are there sort of surprise new gifts coming? I have no idea. I suspect there will be. There are people, whose careers depend on working out how to give these mates more money.
Yeah. Mining, then, so jumping a bit. So
mining.
I treat miners a bit. They're not. I don't think they're really in control of their own future because so much of it depends upon the commodity prices.
Yeah.
They can control their costs a bit, so they've got that side. But it seems to me as if the whole Rudd mining tax debacle means we're a generation away from.
Yes, totally agree with that assessment. They've won that game for 25 years. The question I think in mining is how many freebies in terms of rail ports and other sort of goods that traditionally the government was involved in provisioning. How many of them can they swindle? And that's a sort of specific miner opening up new areas. So in Queensland, the debate's about the Galilee. How much will the government be chipping in for rail and so on? And so for new deposits in new areas, that's where the giveaway will be. And certainly more politically connected companies will get it. I think the big guys will just plough on. They'll have a shot if they don't. If they don't get a freebie, they plough on and do it themselves.
Something else.
Yeah. I've got one just quickly on the just touching back on the book from the Great Transportation Game. So just a little bit topical there. We mentioned before with Transurban, WestConnex. As we were talking just off air before, but the East-West link has risen from the dead. The Liberals have decided to throw some magic potion on it, and it's coming back for
East-West Melbourne. We're talking about.
Sorry, East-West link in Melbourne. That's right. Victoria, we are. Has risen again as an alternative to Labor, and they've called theirs unimaginatively the Northeast link in November's upcoming state elections. So just a bit of background there. I just noticed in the book you did some extensive research into all major road and rail infrastructure projects in Australia since 1992, I believe, with the help of Kathy Ahern. I'll give a shout out there. And so you revealed a number of accounting tricks that were being utilised to help James and his game of mates privatise the benefits from toll roads, and one of them being a public-private partnership. Now, if you like, maybe just give that a quick explanation from your point of view, but the crux of the question was really that these things seem to be very commonly used. They're a good way, as you mentioned in the book, and I'll let people check that out to find out more on the accounting side, but in your view, what would be an alternative to a public-private partnership, or how do we fix this then if this sort of game of mates is going to be stemmed?
Sure. So the main accounting trick in the public-private partnership is to take obligations for the government off their books and not count it as a debt.
Okay.
So you essentially let the private part of the entity borrow money, and then you just guarantee it. And or you borrow money, but you package it into a separate entity and don't call it public debt. You know, that's the entity's debt. So it's really just avoiding accounting for the cost. I mean, as a society, it costs what it costs in terms of the resources to build the road.
And when we say this, what sort of size debts are we talking with these typical public-private partnerships?
Look, historically, they're not as high. The ones we're talking about now of tens of billions.
Yep.
That's off the charts historically. We're talking, hundreds of millions per project throughout the 90s and early 2000s. It's just completely gone up an order of magnitude, and that's partly because the newer projects are mostly tunnels, and they're a lot more land acquisitions, and the expectations of the quality does improve over time in these things. So off the top of my head, I think one of the Sydney Tunnel, there was a $350 million guarantee of some debt that the state government took on, and 10 years later they just said, and you guys don't have enough money, we'll just take that loss now and write it off.
Wow.
It was not in the media, it was just some, a few people in the know kicked up a stink, and you had to go and trawl through some documents, and we're like, where did that money disappear to? Oh no, we just took the loss 10 years later. I'm like, but wasn't the whole point not to borrow the money in the first place? So that's the problem. And the other, that's not even the biggest cost to PPPs. One of the biggest costs when you think about the underlying utilization of resources is building the less efficient new piece of infrastructure because it's more profitable.
Yeah.
Because there's more traffic and you can funnel people onto it. You're not doing... there's a conflict between maximising the throughput of the road network, taking roads in the city, and maximising the profit of the person who owns one piece of that. So the big example I have in Brisbane is we have the Clem 7 tunnel. To maximise their profit, they put the toll up to $4.50. It started at $2, and I don't know what it is now. I don't use it. But essentially, we have a tunnel that's 10 or 15% capacity, because no one wants to use it. But that's what the profit maximising price of the toll is. So it keeps everybody on the free public roads, and we still have to go and expand those. What would be better from a total society perspective is to toll the above ground road and funnel everyone through the tunnel, or regain that above ground space for buses, bikes, and all the alternative modes of transport, and put people in the tunnel. But instead, we have a 3/4 empty tunnel. And that cost, that economic cost to the city as a whole, is much, much bigger than the sort of $1 billion we might have implicitly subsidised through some accounting tricks.
Okay.
And that's actually what Rod Sims came out last week and talked about. One of the things we've entrenched this process of unsolicited proposals or market-led proposals, where Transurban can come up and say, we think you guys need a road here. I'm like, well, why would they think that? Because they think they can funnel people on, right?
Yep.
Okay, not because
there's already a road there, and we're just going to put another one underneath.
Turns out the road's quite popular, so
why don't you do that? And so there's a big conflict between what they want to propose and what's good for the network as a whole. And so Rod Sims has come out and said, we shouldn't do this. We should have our own team of public traffic planners and stuff who look at where development is and what people are doing, and just tell us what the next most efficient thing to invest in is.
Yep.
That's the trick there with the PPPs.
Yeah, I'll also add that that part of this problem comes down to the vertical fiscal imbalance between the feds and the states. So, I often write about obviously running a big Australian mass immigration policy, and the feds love it because they gain most of the budget revenue, about 80%. But of course, the states are left picking up the cost, and the states can't obviously fund. Well, they have trouble funding this on balance sheet, so they resort to these little tricky accounting tricks like the Westgate Tunnel, which Transurban's done, which Transurban's going to build for about $5.6 billion, but they get to extend tolls on CityLink and effectively get $15 billion in revenue. So it's a real dud deal for taxpayers. But again, this has come about because we've got this growing population. The feds are collecting the revenue. The feds won't fund the infrastructure. They're pushing on to the states, and then the states are doing these tricky little accounting tricks. But obviously, we all lose overall.
I want to flip back to the investment, if that's all right.
Yeah,
just
sure.
With a couple of the others, because I've got a few others that I want to. So the energy sector, I think I was showing these guys some respect. Like they went through this PRRT, which is pretty complicated, looked pretty good at 100 oil, but they're not paying anything on it now. They managed to get away with no reservation on the east coast. They've managed to get international pricing, which they're charging all up and down the thing. That seemed like the guys who have it all, I guess, and maybe have they gone a step too far? This is my question for the energy sector. I don't think Morrison's serious about an energy review, but the question is, have they taken it a step too far in that energy sector that now they're actually going to have to front up?
Perhaps. I mean, they will go too far at some point.
Yeah.
This is. There are good things being in a rich democracy. When you get pushed too far and particular industries are really dominating, we can push back through various means. So, look, I don't think it's going to be just yet or in the immediate future. Just look at what the banks get away with. And we've had this Royal Commission, and I think the general expectation is there's going to be minimal change. No one's going to be in jail. This is many billions of dollars. You can look at the superannuation sector. There's essentially no political motivation to crack down. I mean, the fees in super, $30 billion a year. It's just for people to stick money in, index funds or whatever they do. It's off the charts.
Nucleus is launching our super fund quite shortly, but we'll say we're on the other side of that. But so we'll be upfront in terms of that. But I guess what I want to say is we completely agree. To take something so complex as super and say to people with no economic knowledge, here you go, put away 9.5% of your money, and then you're gonna have to make the most complicated financial decision you can possibly do. And by the way, if you stuff up, that's it for your retirement. Is crazy for the vast majority of people. People can't be bothered to do their phone or their electricity contract. Why would they?
Okay, just let me give you an example. My parents have to come and visit me to download an app on their phone, and they're supposed to, have $500,000 with some professional financial salesman for their whole life. I mean, it's absurd. I mean, people can't even compare electricity bills. I'm an economist. I don't even know which superannuation account's best. I've got a PhD in economics, right? And it's actually, financial markets should be for sophisticated investors who want to make investment decisions and raise capital. They shouldn't be tools for distributing wealth in a way that can be done. I mean, the pension system's managed for some phenomenally small percentage of the dollar value given out. It's like 0.01%, and the superannuation system's managed for 1.2% on average of the $2 trillion in balance. I mean, that's that's 12 times or more, 120 times more expensive. It's off the charts.
Yeah, absolutely. No, look, as I said, we're in the same industry, so very much sort of have that same belief. Just talking to people, like Tim spends all day talking to investors, and the number of people who clearly have no idea about what they're talking about and are just looking for help. And you just say, well, we sort of feel we're trying to do the right thing by people, but you could easily see how people not doing the right thing, shiny this, we'll give you a bottle of wine here, and we'll take you to the cricket over there, and next thing you know, you're bundled into some huge fee-paying machine.
And I think another thing too is because obviously we're starting out quite small, right? So the cost for us versus the amount of money that we're investing is quite a big gap, right? Where I can't what I can't fathom is that when you're looking at the everyday super account, which has tens or hundreds of billions of dollars in it, and we're nearly the same price as them. They might be a little bit cheaper, and the amount of income that they're getting and the way they run their fund. And we know, and anyone that's smart knows that that invests money knows that typically it costs, it doesn't cost that much more to manage 10 million, 100 million, or $1 billion, and yet they can price themselves at such
but
the
sales cost.
The sales cost more, and the marketing costs more.
But the empirical data actually shows that as Australia's super pools exploded, the fees have barely moved. So this is just pure cream that's being creamed.
Look, there's an interesting discussion happening in economics about these captured markets. Can you be a non-consumer of a product? Because if you can't be, then you really don't have that freedom or that consumer choice that we assume in our economic models. And this is the problem with super. I have no issue with people saving money and investing it and getting advice and paying fees. But forcing everyone to do it with a massive share of their salary when we can't seem to get wage growth anywhere, and now we're going to tell people perhaps, chuck another 3% of your wage here and don't touch it for 40 years. I mean, it's ridiculous.
And the other problem is people are forced to save into this for something that's going to, for a retirement event that's say 40 years away. So people discount it straight away, and they don't worry about an extra 1% in fees because it's so long away.
I never did until last week. And now I've sat down with my wife and we're like, let's check our super. What are we going to do? I look at this stuff every day and I still hadn't bothered yet. My working assumption was I'll never get this money. Who cares? There's another
40 years away.
The system could change, the next trade war, the next whatever.
Yep.
The financial system could radically change. There's no guarantee I'll get it back. Why would I bother? Making decisions like when I go and choose a car to buy, I'll do my research and make a decision. Because I do it today.
So for me, I've got a slightly different tint to you guys. Is that I still think that people should be saving the money, but there should be a default cheap option run centrally that you can sort of go that gets you a pension plus payment or whatever it is. But he's basically saying you need a no-brainer product that's managed centrally, that's safe and all that type of stuff.
So that's what I propose in the book. The Danes have it. Lots of European countries have a default saving fund, right? But I personally would say we can go further and say, well, why bother? Because you can't save really macroeconomically. We're just taking someone who's working their money, and then the system gives other people who are selling those assets that they'd previously saved to the people who are currently saving. It's a very convoluted financial scheme to essentially redistribute money that we do all the time through the tax and transfer system.
And in the end, I think we all just want to reduce the amount that goes into sales in this area.
Let's agree on that. You can wipe a percent off. A percent of $2 trillion, by the way. What's that? 20 billion. Every single year. Every single year.
So coming out of the banking commission, so I mean, I think there'll be a few knuckles racked, but it does seem as if you showed up to the Royal Commission contrite and said, "Oh yes, we did this, we stole, we did whatever, but we're really sorry about it," you got away with it. Whereas if you turned up a bit argumentative, you're in trouble. It seemed to be I don't know whether you've seen anything.
I haven't noticed it like that.
Anything you've seen that suggests that there's going to be major repercussions for the banks.
Things change when it affects rich, well-connected people. Political connected mates can get away with it, but if there's enough of their mates who are feeling the pinch, they might second guess what's going on. Go, hang on a minute, is this really what I do? Because I'm actually paying this super fee as well, right? I'm not getting that super fee, and so there are these tipping points when I think the right influential groups feel the pinch, and then all that pent-up frustration of the community comes out, and you've got the heads of the government departments, all those key political players going, all right, let's actually take some action. It's a real tricky thing. You can't put your mates in prison if you're. A lot of the financial regulators are, previously bankers and vice versa. But there will be a tipping point, and I'm pretty confident in general. Although my book is, we are at a Brunswick pub here, aren't we?
Sounds like your groupies have turned up, Cameron. So there you go.
Yeah. So look, I'm pretty confident that we have the capacity to change things when we reach that critical mass. It's just, which sector is it going to reach that tipping point next?
Yeah, and the one what I wanted to finish with is probably we haven't got time to explore properly, but I note in the property development area, if you run through, so we do global investment, so I always running through different companies, and if you look, okay, well let me look at property developers globally. They're in Hong Kong, they're in Japan. You find some Australian ones, a couple of Canadian ones, hardly any US at all, and you sort of go, well, is it the countries where you need to be politically connected that you get a lot of these, you get to be a big property developer because you're making those. But I guess what I'm wondering is we've got a Prime Minister now who's come from a property lobbyist background, and property prices are certainly sliding. And so is he going to throw a bit more at the whole property market, and what's the most likely in your view that sort of over the next little while he can, what's a finger in the dike of the rapidly leaking wall that's the property market?
Yeah, look, I expect there to be more first homeowners grants of the magnitude we've never seen before.
Tapping your super.
They'll be tapping your super. The turnover has been quite low, recently, and so there will be this pent up people who've been delaying buying first homeowners and whatnot. So there are people waiting. And it's whatever they can find to get them off the sidelines soon. Look, I expect all that sort of stuff to happen. The first homeowners grant, superannuation. I don't know what else, but they'll be creative. My outlook for property, maybe it'll be, there'll be a political catching mitt under the Sydney property market before too soon, and we'll see how effective that is. That really depends on how many people they can tempt in. I suspect
and whether they wait too late, in my mind. If there's enough downward momentum,
I agree.
Go, I don't care about the first time I go anymore because it's fallen 10% or 15%. I don't know what's going on.
Well, price will fall by my grant in the next 6 months, right? It would have to be a massive grant, I suspect, to stop that accelerating decline.
Well, remember, there already is a kind of granting with the stamp duty concessions that came in July 1 last year. So, Melbourne and Sydney prices would probably be falling a bit faster than they are.
Yeah. Anyway.
Okay, very good. So look, on that note, we might finish up. Thank you very much for your time today.
Thanks for having me.
All the best, Cameron, with the unspoken alternatives for expensive housing, and look forward to checking that out. And also, for anyone interested, go and check out the Game of Mates book. It's out on Amazon. It's gameofmates.com, isn't it?
That's right.
Yeah.
You can find it very easily online.
So head on over there and check that out. And thanks again for coming along. Enjoy Melbourne and enjoy your show tonight and prosper.
Thanks, guys.
Cheers.
Thanks.
Nucleus Wealth and the Macro Business Fund was put together to help give you access to quality, well-researched stock analysis and superior macroeconomically minded asset allocation. We use technology to help us provide a service typically only available to high net worth and sophisticated investors at a fee level that rivals the more basic solutions available to these everyday investors. We do this by using separately managed accounts, which allows clients to enjoy unparalleled transparency in what they own and why. It also means that each client effectively owns their own separate and discrete share portfolio, which is managed by us. We have partnered with Linear Asset Management, who are backed by the ANZ Bank for cash management, and JP Morgan, one of the biggest banks in the world, as custodian of assets. We feel that this structure is the gold standard for your financial protection. In addition to this, we offer 19 separate and individual ethical screens that you can use to help tailor your investment, to ensure that your money is not being used to support companies that deal in areas and practices that you feel are important. By eliminating the areas that are only important to you, you keep the potential for higher returning areas that you might otherwise be ambivalent about, and these would typically be ruled out in broader ethical products currently available in the market. The name Nucleus comes from our ability to provide the core holdings of a client's portfolio, allowing them the time to explore areas that may be of interest or they may have experience in. We also offer a complete investment solution for those who don't have time to coordinate their own investments. Our investment team has decades of experience in world markets, and we have access to a global team of stock analysts. By removing the layers of middlemen that typically sit between your money and the markets, we've been able to reduce fees and provide unparalleled transparency in the solution we provide. For more information on what we can do for you, please call 1300 623 863 or contact us through www.nucleuswealth.com.